Well, thank you all for attending the OreCorp presentation. OreCorp is a ASX listed development company focused on the Nyanzaga Gold Project in Tanzania. We delivered the DFS in August last year, project with a significant production profile of almost 250,000 ounces of gold per year for the first 10 years of production, long life operation, low all-in sustaining cost of $954 per ounce, pre-production capital cost for the project of $474 million, robust NPV and IRR, project that provides for significant upside in an escalating gold price environment. So at a 2,000 gold price, the NPV increases by almost 50%, that's 50%, short payback period. Our main focus at present is the project financing workstream. We are working towards the mandating of a banking syndicate, appointment of the independent technical consultant and the Lenders Council. We've also received significant interest from credit funds and streaming and royalty companies, where historically that may not have been the first preference for us. We are now in an environment where the cost of debt is increasing, and some of these other proposals are stacking up very favorably in our financial model. So essentially keeping all options open on the financing front to minimize shareholder dilution ultimately. If we look at our capital structure, 399 million shares on issue, 63% of that held by our top 20 shareholders, very tight share register, $21.2 million of cash in the bank as of end of last year and no debt. 22% of the shares are held by institutional shareholders, and then some ultra high net worth individuals and very big names in the WA mining industry in the form of Nick Georgetta and more recently Tim Goyder from Liontown and Chalice fame that provides excellent project validation. We have an experienced board and management. We did several changes to our board at the AGM last year, with Matt taking on the role of executive chairman and I took over from Matt. As a board, we've got significant experience in Tanzania dating back to the early 90s with Matt and Alistair and myself and Michael Davis from early 2000s. 30% corporate tax rate in Tanzania, 6% government royalty for gold refined internationally. That reduces to 4% for gold refined in country. There's a new refinery that was opened late last year, which we are in discussions with to better understand LBMA accreditation and costs. The 2% reduction in royalty equates to $35 an ounce upside on our all-in sustaining cost at $1,750 gold. Nyanzaga is located in the Lake Victoria Goldfields, an elephant in elephant country. The special mining license for Nyanzaga was granted on the 13th of December 2021. Framework agreement signed on the same day, environmental certificate granted. Those are the cornerstone permits that supports the development of Nyanzaga. Project well supported by infrastructure and services, existing access road, water from the lake and power from the national grid at a very competitively priced 8 cents per kilowatt hour. DFS delivered the very first ore reserve for the project, 40 million tonnes at plus 2 grams per tonne for 2.6 million ounces. We've also identified several upside opportunities for the project, first being an exploration target as a depth extension to the Nyanzaga underground, which we believe may contain between 4 and 6 million tonnes of mineralized material at 3.5 to 4 grams per tonne. At a $1,750 gold price, there's a fourth stage to the Nyanzaga open pit containing 8.4 million tonnes at 1.17 grams per tonne, 6-to-1 strip ratio, and then Kilimani remains open at depth and along strike. So we believe the combination of those areas may provide us with another 3 to 5 years of additional life for the project. Open pit strip ratio life of mine of 3.7 to 1. That includes 12 million tonnes of pre-strip material, which will take approximately 7 months and will deliver 750,000 tonnes of ore to the ROM pad for commissioning and commencement of production. Life of mine grade of 1.3 grams per tonne. Life of mine mining cost $3.77 per tonne mine, which benchmarks high. We believe there may be opportunity for that to improve during the competitive bid process. Underground mine will start 6 months ahead of the open pit. We'll target an area of high-grade mineralization towards the bottom end of the ultimate open pit. Underground is designed for 1.5 million tonnes per annum at an expected life of mine grade of 3.55 grams per tonne. Very conventional CIL circuit. Milling circuit will grind to 75 microns with an overall gold recovery of 88% life of mine. Pre-production capital cost of $474 million. Half of the mining cost is associated with the establishment of the open pit mining contractor and the 12 million tonnes of pre-strip. All-in sustaining costs expected to remain very stable through the life of the operation without any significant spikes on an annual basis, which is attractive from a cash flow management perspective. Expect to produce 200,000 ounces of gold within the first 12 months of production, steadily increasing to 300,000 ounces of gold per year for years 5, 6, and 7. Nyanzaga compares very favorably to our other peers and evolving and producing assets on a production profile basis, and also on our reserve grade of plus 2 grams per tonne. We maintain a strong focus on our ESG. We've done a lot of work on the resettlement action plan over the years. Our emission intensity is expected to be 17% lower than the average for the gold industry in 2020. That we expect will further improve with the commissioning of the Julius Nyerere hydropower station, which will increase the hydro component in the grid to 71% with a balance from natural gas. Expect to commence early construction works by mid-2023 with first gold production 2 years thereafter. We are making progress with our development preparation with several work packages in various stages of tender at present. We've identified several upside opportunities, some I've already talked to. We did price the DFS in a high gold price environment. We have seen a bit of improvement in lead times, logistics costs and the like since then, so we remain confident with our cost estimate. And then identified several opportunities within the SML boundary and surrounding licenses for future potential upside to the project. We've seen a significant improvement or influx in international investment since the change in power in March 2021. Majors like BHP's commitment of $110 million in Kabanga Nickel, Barrick restart of the Bulyanhulu operation, and a commitment of up to $60 million in surrounding licenses. Also the construction of the $3.5 billion East Africa crude oil pipeline, and more recently the negotiations between Shell and the government for a $35 billion LNG project. So in summary, the project presents a project of significant scale, long life operation, excellent production profile, high margin. It is permitted, fully permitted, that is. Lots of interest from the financial institutions, and targeting first gold production around the second half of 2025. Thank you.